let's take a look at what the global markets are doing. And first up, as always, take a look at the Asian markets, largely higher.
Then you get the 61.8% retracement, which is closer to about 19,700. The precise number is 19,693, which is the next resistance for the Nifty.
The bad news is China's economy is going to continue to be challenged by the bursting of their property bubble.
This was a good set from Aisha. If we look at the numbers, revenues were up 17%.
The LME supply demand is very tight.
They've upgraded the EPS estimates by 18 to 42%.
There you have it, Prashant, the first bet.
Well, I think it's looking pretty, it's a slower kind of a start as expected.
So I would say large caps will do well relative to small caps.
The quarter we completed the transition in the United States.
Yeah, I think the chances of something going wrong increase as at these kind of rates.
We have a screen that's looking a little bit like the post-Diwali party sort of sluggishness.
The 4 number is always pleasant, so that's a widespread expectation.
For the markets, not so much in a festive mode today. We've seen Nifty declining by 75 points. Good afternoon. That's the day so far, and we're down to the last 1 hour. You are watching us. So this is Closing Bell, and we're coming to you live from the CNBC-TV18 Motilal Oswal Studios. I'm Surabhi Upadhyay, and as always, with me is Nigel D'Souza. So yes, maybe not that festive, maybe taking it a little easy after the Diwali party, but guess where the party is continuing and kicking off? It's the mid caps.
Yes.
That's where the green has come in.
Yeah,
afternoon,
that's right.
Nigel.
Yeah, that's right. Hi, afternoon, Surabhi. And in the morning, we made this point, right? Volumes can be relatively lower. The headline index maybe consolidates a little bit. But the sense you're getting is that the mid and the small cap space, well, they have plenty more of steam left in store. And that's the way it's precisely playing out, right? Good amount of stocks in the broader markets that are doing well. Yeah. And just one factor, it's been a quiet session. And on these quiet sessions, sometimes you see the last 30-35 minutes, see some kind of volatility, particularly when there's an expiry. So you have low volumes, you have an expiry as well. Can the Nifty Financial Services Index do a bit of a gig in the last, last 35 minutes? Let's see how that goes. For the time being, that index is down close to 0.5%.
That's been, a bit of the party pooper. But the Bank Nifty, by the way, the other index, that's had a great recovery. Pull up the intraday on the Bank Nifty. In the morning, that was one of the key problem areas for the market. It was banks and a lot of these large cap IT stocks. Well, at least on the banking side, the picture has turned quite a bit. We'll see how that goes. If you look at now the laggards on the screen, it's really IT. That's pretty much the problem area. Let's check out Reliance. That's still down. So IT and Reliance is a problem. Banks are looking better. By the way, I just want to point out that global screens are looking far more greener. European screens right now. Most markets are up about 0.5% or so. The chatter is going to be mostly about US inflation. The numbers coming out tomorrow, the US CPI numbers. But that's the conversation pivot, really. And with global screens looking good, will the large caps attempt a recovery? I think that's something that I'll watch out for, considering that banks are much better off right now.
Well, that's right, Surabhi. The last, from last summer to this one, it belonged to the mid cap and the small cap indices. The question is, will there be a bit of a rebound coming in from the large caps and maybe perform in line or outperform the broader markets? Well, time will tell. Question is, for the next 60 minutes, how do you position yourself? Midesh Thakkar is back with us. Midesh, what do you make of today's trading action? Volumes on the lower side, we were down more than 100 points. Now we're down close to around 70 points. Or their uptrend is still intact?
Good afternoon, Nigel. I think, we are just hovering around the important pivot level, which is 19,450 for the Nifty. And the Bank Nifty, I think in the meanwhile, while during the day it was down a bit, it has staged an impressive recovery and is down only about 60 odd points. So I think the way I'll approach it is if the Bank Nifty can show more strength and, start getting past levels of 44,000, then I think, we'll see a good recovery happening either towards the end of the session today or maybe tomorrow, after tomorrow morning. So for the timing, I think we're holding our horses. It's not a negative market, but it's a market which needs to show strength on the upside, and that confirmation part is missing from the entire equation right now. So we'll hold our horses. But as I said, I think, we're still trading with long buys. On stock side, I have a buy on Tata Power. I think that's showing a good move on the upside. Recommend a buy here with a stop at 253 and a target of 270 on the upside. And the other one is Canada Bank. I think, that's a good breakout with a strong price and volume action. So recommend a buy here as well. keep a stop below levels of 396.5 and a target of 420 can be looked at.
Got it. Okay, all right, Mitesh, thanks a lot for that. Well, let's focus on the big outperformer. That's Coal India. If we look at the basic numbers, that's the top line, the EBITDA, as well as the profitability. All of them came better than what we were working with. And one part of the puzzle we already had, because the volumes numbers, provisional volume numbers already were there. So the key reason for the beat would be higher realizations. And the FSA realizations actually were the reason for the beat. But besides the numbers, they also came up with a dividend of 15 rupees, and the street likes that. A couple of brokerages have written as well. Jefferies, they have gone ahead, they've upgraded their estimates as well as the target price. They have upgraded their EPS estimates by around 18 to around 42%. They say that around 6.5 times PE, the stock is fairly reasonable. They say also highlight that in the past it's traded in double digits as well. That's in that phase of 2013 to 2018. On volumes, they're upping their estimates, and now they're working with a 7% volume CAGR for the next few years. And they're saying there are a couple of headwinds, but both of them already reflected. Whether you talk about lower e-auction prices or also you talk about higher wage expenditure, already those two factors are being displayed in their numbers. Moving on to CLSA, they have downgraded the stock, but they've increased the target price. The target price moves up. They've raised their estimates as well because they're factoring in the FSA realization beat that we saw in the past quarter. Volume growth, they says, yes, it's going to be high. But they believe that the best in terms of pricing is likely to be behind in the near term. So that's Coal India, beautiful looking stock, up close to around 5% as we speak. Deepan Mehta of Alexa Equity joins us on the show. Hi Deepan, wishing you a very, very happy Diwali first. Please wish all at home as well. And from our family to yours, and obviously we're part of the same family as well, who talk almost every few days. Well, wishing you all the best in the new year. Tell us about Coal India though. Is it on your list, or like metals and cement, Coal India as well, you don't like it too much?
Yeah, good afternoon, Nigel, and thank you for your kind season's greetings. And I extend the same back to you, your family, and the entire team at CNBC. I feel really connected with CNBC, having been on your shows for the past so many years. It's really a privilege and a pleasure. Coming specifically to Coal India, you're right. You know my views. Over the years, you want to look for companies which have more steady earnings, secular growth stories. And if one keeps on focusing over there, then eventually you will get some fantastic gems. But certainly, I think there could be a trading rally in Coal India. Numbers are impressive. And, I think under the Modi government, all PSUs have really pulled up their socks and they are focusing on improving their operations. And Coal India is no different. One of the biggest problems have been increasing their volumes, but they're also, I think, they are giving adequate attention to it. And over a period of time, I think there's a general realization that coal as well as renewable energy are both going to survive over the really long term. And coal, in any case, is in short supply, so there'll be demand for Coal India's stock as well. So very positive on the short to medium term for Coal India. It's a great stock in terms of dividend yield, and you could certainly price in a higher price to earnings multiple at some point of time.
Okay, got that. That is Coal India. Solid mover. It's been a good ride for Coal India over the last couple of weeks and months, in fact. And Deepan, season's greetings to you. I couldn't agree with you more, and it's fantastic for us as well to have you here week after week. As Nigel said, it really has become a little bit of a work family, and we feel very connected, though it's through the broadcasting channels, but we feel connected nonetheless. So wish you a very joyous festive season and a very positive and prosperous new Samvat as well. Well, lots of questions coming your way, Deepan. Just hang on for a second because I want to see if we have Mangalam with us. There's another stock that we'll talk about, Sun TV, in a bit. Sun TV is actually reacting pretty well to its numbers. Okay, yeah, I think Mangalam is actually there with us. So let's straight away get to it. Mangalam, when I saw the Sun TV numbers, one number that caught my eye was a decline in ad revenue. Clearly, that's not perturbed the market at all, and the stock's flying away. So tell us, what's the fine print looking like?
Well, the one word to describe Sun TV's results and the performance today would be Rajnikant. The reason why I say that is because, one, the revenue grew by about 27%, but that was despite ad revenues declining by 4% and subscription revenues increasing just by 5%. So what explains this big jump? Remember, during the quarter, there was the Rajnikant movie Jailer that came by, collected over 600 crores in gross collections, and as a result of it, Sun TV benefited from that as well. We had an EBITDA jump of almost 35%. They already have best-in-class margins, and this time around from 65%, the margins went all the way up to 69%. However, the net profit grew by just around 14%. Why is that? Because again, Rajnikant, what happened was, with Sun TV's depreciation policy, every quarter they release an asset, in this case being this movie, they depreciate it as well. Most of that is taken during that quarter as well, which is why the depreciation jumped from 80 odd crores to over 200 crores. The reason why the stock is moving higher, apart from good numbers coming in, are three important reasons for the stock. The first one, in the second half of this year, post World Cup, ad spends or ad dollars which are now going to Cricket World Cup will now go to programming as usual, pun unintended out there. Also, the other thing that you'll be watching out for is that Sun TV, unlike other players, has not committed huge investments into their OTT business, so that supports their overall cause. And then we speak about margin of safety. Sun TV's current market cap is close to around 22,000 odd crores, and nearly 50-60% of that has margin of safety because one, they have the IPL business, which was last valued close to around 7,000 crores by analysts. The second thing is that they have cash of nearly 5,000 crores, cash and investments of nearly 5,000 crores on their books. So 12,000 crores of the 22,000 crores is the margin of safety. And if you include long-term bonds that the company holds, which is also another 1,500, 1,600 odd crores. So the remainder business is available at mid-single digit EV to EBITDA, and which is what is exciting the street, and as a result of which the stock is moving higher.
Okay, got that. That explains it. Thanks, Mangalam, very much for the details over there. Deepan, I don't know, are you a Rajnikant fan? If not, more importantly, are you a Sun TV fan or not? What's the overall view on media? And if you are positive, then does Sun make the cut in that universe?
Yeah, I think so. And, they have the IPL team as well. So that's also a lot of value creation happening over there. Year after year, IPL becomes larger and larger. And I'm pretty certain that their team has been doing as well as it has been. Should be creating value for Sun TV shareholders as well. And, I really appreciate what Mangalam said, that from this quarter onwards, rather from mid-November onwards, you could expect ad spends to increase for the media companies, and that resonates with me. And if you look at the way the FMCG companies have been spending on advertising spends, they've taken advantage of low raw material prices to spend on more on advertising, and that clearly the benefit is going to go to these general programming, general entertainment channels like Sun TV. And Sun TV has a massive market share and eyeball share as well in the key states. So from that point of view, very positive on Sun TV, and elections also coming up. So that could be also an additional trigger for media stocks. And certainly valuations are pretty reasonable.
Okay, all right. Deepan requested to stay with us. We also spoke to market veteran Mr. Ramesh Damani on his take on the PSU space. Let's listen in to what he had to say.
If you look back at the history of markets, every secular bull move in India has had leadership. So, for example, in 92 it was the cement stocks, in 2000 technology stocks. I'm of the firm belief that in this bull market, the leadership is the public sector stocks. Now, what I believe in that, there'll be a rolling bull market there. So we had movement in defense, then rail, and then banks. So I believe the leadership remains with the public sector stock. And remember that in a bull market leadership move, stocks go up 20, 30x from the lows. So I feel that we are witnessing a similar boom. And I think they will really blast off in what we call the third phase of the bull market, is perhaps after the election results are known to the market. So I believe that will continue to be a theme.
Okay, now that was Ramesh in conversation with us yesterday here. He was live with us from the Bombay Stock Exchange. And the point that Ramesh was making, that as he sees it, PSUs will continue to remain a major leadership sector for the market in the new Samvat as well, despite the run-up. In fact, pull up the PSU index today, pull up a lot of these stocks. In fact, let me go back to my screen before I toss this to Deepan. PSUs have been the high flyers, whether it is a BHEL or a PFC or a REC, or you look at the banks today, look at UCO. It's just across the board, IOB 4.5%. And as I'm speaking, a lot of PSU banks are rallying now and reaching the high. That's the PSU bank index. Pull up the Nifty CPSC or the PSU index per se. Once again, it's the best performing one in the market. Now, what side of the debate would you be on, Deepan? Yesterday, Mr. Damani gave us tremendous perspective. He said that this will keep going higher and you'll have to figure out how to negotiate this entire complex of PSUs. What's your take and what's your advice?
No, I tend to agree with him. I think after many decades of underperformance, PSU stocks are making a comeback, and that too with a lot of momentum and a lot of trading interest as well. And one other aspect is that a lot of PSU stocks, the shareholding pattern is very narrow in the sense concentrated with the government and a few institutions. So from a liquidity perspective, also, small amount of buying can take these stock prices much higher. It's just that maybe for the time being, they've run up a little bit ahead of their numbers. And at corrections, I think a lot of these companies would make good entry points, particularly like banks as well as the defense companies, especially defense companies which have got order books going into 3-4 years or beyond, because that provides good earning visibility as well. And that should lead to higher price to earnings multiple. At the same time, I think it should lead to even higher return ratios, which will support higher price to earnings multiples. Very positive on PSU banks. It's just that optically, for the time being, they appear to be slightly overbought.
Okay, all right. Thanks a lot for that, Deepan. Well, for the time being, we'll slip into a short break. On the other side, Devina Mehra from First Global joins us to share her take on markets and the way ahead as well. Stay with us. Welcome back. Well, a few stocks actually have slipped in the last few minutes. So let's pull up the intraday chart of a few names. So GMR Airports has slipped a little bit lower. I recall the stock at 63, 65 rupees. And a lot of people were saying now this stock's set to take off. But actually the reverse has happened. You pull up, I think, last month and a half or 2 month chart, you'll see the stock actually has dipped from the recent highs. So that moves to the low point of the day. You had Emphasis as well, that's moved a little bit lower. So that's sitting with a cut-off closer around 2.5%. So let's get the intraday chart of that one up for you on the screen. On the flip side, one stock that's flying away, that's India Bulls Housing Finance. Just take a look at that. Beautiful move is what we're seeing. India Bulls Housing Finance, one of the big underperformers, but that's bucking the trend as we speak. And Surbhi, what do you say about these exchange-related stocks? Valuations seem to have definitely taken a backseat, but these names, BSC, MCX, they have rallied. There have been attempts being made by the current management to change the way the business is run. And both those two stocks, they are starting the new year on a solid note. BSC as well as MCX, both of them flying away.
Okay, absolutely. These exchange stocks have been exchanging a lot of wealth with their shareholders, perhaps you could say that. Well, as we begin this new year, as part of our Samvat Centimeter, we at CNBC-TV18 polled a number of market experts to find out what they think markets will do in the new Samvat, what the key risks are, and what factors could of the street poll.
Samvat 2079 ended on a with gains across the board. In fact, all sectoral indices ended in the green, with the PSU index and emerging as a new leader of this bull run. So we asked the experts what to expect in the dipstick survey across more than 20 market participants to gauge the move. The biggest feedback was they continue to bet on stocks as a preferred asset class. 68% voting for stocks, only small portion of people opting for gold, and fixed income was the second best as the most preferred asset class. So what kind of return should one expect in Samvat 2080? 45% of the market participants see the Nifty ranging to 22,000. Only a small 9% expects the Nifty to fall below 19,000, but there was an equal amount of bull versus bear, with nearly 13.5% each voting for a Nifty above 22,000 as well as below 19,000 as well. So earning has been a big driving force for this market to outperform. So we asked experts what to expect in terms of earnings in FY25. Nearly 50% of the participants expect the earnings between 12.5 to 15%. There is a small portion who also expects the Nifty earnings to be much higher, between 15 to 17.5%. So that's the earnings perspective. Now, what to expect in terms of sectors which can do well, or what they'll bet on. The biggest feedback is that this could be the year for the return of the large caps. 50% opted for large caps, and only 13.5% said that small caps can continue to outperform. So what are the sectors which can do well in Samvat 2080? Financials stand out in terms of the biggest bet, and within financials, it's the PSU stocks which they expect will continue to outperform. The least preferred sectors were autos, cement, pharma, and manufacturing. All have done well, but now they expect a bit of underperformance there. So what's the key risk for the market going into the next Samvat? The key domestic risk seems to be the general elections in 2024. For almost 55% opted, that's a big risk for the market. From a geopolitical perspective, the biggest risk seems to be two things. One, the geopolitical risk, as well as the Fed policy. These were the two big risks from a global perspective. But given the momentum in the market, looks like Samvat 2080 is going to be a good note, but this could be the year of return of the large caps.
Return of the large caps. Will that indeed happen? That is the big, maybe billion-dollar question. Thank you, Nimesh, for that very interesting poll. Devina Mehra, founder, chairperson, and managing director of First Global, is with us now. Devina, wish you a very happy Diwali, first of all, from the entire CNBC-TV18 family. Hope it's a healthy, wealthy, prosperous, and positive new Samvat for you, all at home and all at work as well.
Thank you, Surabhi, and wish you and the team at CNBC, as well as all your viewers, a very happy Diwali and a fab new Samvat. Health, wealth, prosperity, peace for all.
Thank you. Absolutely. Peace for all is perhaps the most important one now. So I don't know, Devina, if you could hear that poll that our colleague Nimesh just drew up, but basically it ended by saying the big expectation is that the new Samvat is going to be the year when large caps decide to catch up. Do you think that can happen? Will it be time for the big boys to stand up and get counted?
If you choose wisely. So first of all, of course, before talking of the new Samvat, I just want to tell the viewers that equity is not an asset class where you should be making decisions really year by year, because we all understand in theory that equity is a volatile asset class. But I don't know how many people understand how volatile it is, that the returns can vary not just from year to year, but from decade to decade as well. So you really have to have a really long-term view when you're talking equities. But coming back to where the markets are today, I have never ever made sensex or nifty projection at Diwali time or at New Year time either, for that matter, because that is something you cannot know. Daniel Kahneman calls it objective ignorance that to say something with confidence about something which you not only don't know but cannot know is not sensible, to say the least. But as far as the market, where markets are poised, so coming back to what I was saying in terms of the variability in equity returns, we all have this figure of 15-16% return in equities, which is how the sensex is compounded in 40 plus years. But the variation, I'll tell you how dramatic it can be. So if you look at the start of the sensex, if you'd invested 100 rupees in 1980, it would have become 700 in 10 years' time. If you had invested it in 2010, it would have become only 230 rupees at the end of 10 years, barely beating fixed deposit returns. So the variability is as high. And the point why I was citing this 2010 to 20 return, which was just little over 8.5% compounded, is that meant that for a whole decade, the equity markets were far below that trend line of 15-16% compounding. So even after that run up from the COVID lows, we are still not close to the trend line. So the probability of a crash becomes high only when you are far above the trend line in most cases. So the risk of a crash doesn't appear very high to me for the mainline large cap indices. Again, as I said, you have to pick the sectors carefully. And but on the small and mid cap side, the risks are much higher given how they have run this year, and also given the history, because a lot of investors here may be new, they will not know the history of small caps. So just to put things in perspective, from the 2008 high, the small cap index itself fell nearly 80%, 78% to be exact. And it took another 8 years for it to come back to where it was in 2008. Yes. And then you had this bull run in 17, 18, and then again a 2/3 fall. So, I mean, I hear now some managers and micro cap advisors saying I have compounded 50% in 2 years, but when something falls 2/3, it can triple and you would have made zero returns. So
hi, Devina. Good to have you in. Thanks so much for joining in, and thanks for helping us, jogging the memory back as well. There can be tough times, but in the longer run, I think things look up. So, let's talk about a couple of themes then. What do you like in the market right now? If you had to pick that one particular sector, I don't know whether you're going to talk about stocks, but what would that theme be that you would like our viewers and investors, to focus on, do some research out there, and maybe there could be some potential?
So first of all, whatever I talk about may not necessarily hold for a year, because one other thing in markets are that themes change, whether it is sectors, whether it is geographies in terms of countries, or whether it is asset classes. Things go in and out of fashion, or in terms of how well they are doing. So coming back to what you were asking in terms of sectors, if I look at our present portfolios, our biggest overweight sector is industrials and capital goods. Now, the difference between us and many others who are talking about that sector is that we went overweight in it in October 2021. So it's been over 2 years that we have been overweight. And the question actually that we ask every quarter is the run over? Till now, our systems have not signaled that the run is over. So we continue to be overweight. We have trimmed, we have changed stocks. That's been a brilliantly performing sector for us for 2 years, because stocks have doubled, tripled, and so on. We added more of in 2023 in terms of sectors which we still continue to like are auto components, pharma. So very different from, I saw those were supposed to be the dog sectors in your survey, but that's what our systems like. And a few construction stocks also we have bought. Banks, where I'm always nervous or skittish investor, we don't like quite so much. I mean, between the two, of course, we prefer the PSU banks. So that would be broadly the landscape of what we like presently. But as I said, it's not necessarily a year-long call.
Okay, all right. Okay, that gives us a fair idea, a flavor of how your portfolios are positioned. Devina, just hold on for a second, because we do want to talk to you about this whole mega PSU rally, and within that, I think power specifically. Just wait for a second because our colleague Rachna is picking up some inputs on why power stocks are rallying today. One of the additional triggers seems to be that Union Power Minister has emphasized the need to expand thermal power capacity in India to meet growing demand. Let's go across to Rachna to get the latest on this. Rachna?
Right. As the world is looking at ramping up renewable sources of energy to meet rising global power demand, including India, the Union Power Minister R.K. Singh has issued a powerful statement. And that is that while India is focusing on renewable sources, there's also a need to ramp up thermal sources. He said that India needs about 80,000 megawatt, that's about 80 gigawatt of thermal power capacity under construction to fulfill the rising power demand. Now, to put things in context, India's total power capacity stands at 425 gigawatt, of which over 50% comes from thermal, as it contributes about 239 gigawatt. And the Power Minister wants to add 80 gigawatt to the current 239. This 80 gigawatt is a total figure of thermal power capacity that needs to be under construction. So what's already in construction are power projects with a thermal capacity of about 30 gigawatt, with a mix of state and private players, with a total of 14 such projects across the country. However, 27 thermal power projects with a total capacity of about 24 gigawatts are on hold. This is according to CEA's latest report, which was issued at the end of September. These 27 on-hold power projects have 2 from state, whereas 25 from the private players, whose future now hangs in balance as they look out for more funding options. However, 7 of these 25 on-hold projects have successfully come up with a revival plan. So they will be seeing the light of the day, but not before the next 2 to 3 years. These 7 projects include a revival plan. For 2 of them is coming from Vedanta and 1 from Jindal Power and Steel. Other projects too have been seeing a risen interest in revival, as the market too seems to have taken a note of this need to increase thermal power capacity, as stated by the Power Minister. So, as per Central Electricity Authority's figures and CNBC-TV18's calculation, from the needed 80 gigawatts of under construction thermal power projects, as said by the Power Minister, India now needs about 43 gigawatts more of thermal power capacity to meet this rising demand. The remaining 37 is already in process.
Okay, Rachna, got that. Thank you very much. Interesting stats there. Kind of put the whole story in context. The fact that the need is to move towards renewables, but the pressing sort of situation right now requires India to also up the thermal power capacity. Devina, you have any interest in power? If not power, any other PSU area? Because that's been the real sizzler side of the market in the last 1 year.
Yes, I mean, as I said, the themes always shift. No theme lasts forever. So, this has been another theme shift. So, I mean, as I told you, in banks, we have moved, especially this year, towards the PSUs more than the private sector. And at times we have held some stocks on the defense side also. But I mean, this is not a theme we play in a big way, because a lot of it is also news driven, and you can't really only go by the headline, given even this news report that I was listening into. In power, there are all kinds of things, not just funding, but also whether you've got the coal linkages, whether you've got the environmental clearances, what's the quality of coal that you are getting. So I don't want to do it on a broad thumb rule or seat of the pants calculation. So these things you really have to go into the depth. So I mean, as I said, we bought the odd PSU stocks, but it's not like a big theme that we have played.
Okay, all right. Thanks a lot, Devina, for joining in and giving us your view on markets, and wishing you all the best for the coming year as well. Well, for the markets, we're down close to around 75 points approximately. We're going to get to that expiry last half hour, Rod, and we'll have the Nifty Financial Services Index that could move around a little bit. It was down close to around 0.5%. So let's see how that one's doing as we speak. The mid-cap index still continues to trade in the green. Slip into a short break. You come back, Nimesh should be waiting for us on the other side. He'll tell us what he's picking up in dealing room action. We'll also be joined by our technical experts. They'll tell us some buy and sell calls.
How should we look at this precious yellow metal called gold?
it's like buying a property. If I'm buying gold, I should buy SGV.
Jewelry is not something that you just buy for an investment purpose, but rather it's something that you do to enhance your personality. We are trying that jewelry is actually the investment, the safest investment.
Welcome back. You're tuned into Closing Bell. Just 30 minutes to go before you get into that midweek holiday yet again. So looking forward to that. But let's find out what's going on in dealing room action today. Nimesh joins us to tell us what's he picking up in D-Street action. Well, Nimesh, good afternoon. What's your take? Action is there in the dealing rooms or everyone's on vacation?
This on the Friday as well, that PSU index is now playing like a Virat Kohli, and clearly, it's taking a mental now of leadership. So the index is up more than 1%, and a lot of stocks are buzzing as well. The top 5-6 FNO gainers are all part of the PSU basket. In terms of flows, again, it's a muted day, but my sense is there's going to be a small market close, selling in some large cap names. So maybe some individual names can get impacted because of the flows. I guess for the last 1 week, 10 days, there is a consistent feedback that within the PSUs, the PSU banks are well bid by large institutions, and now it looks like there is a clear action now. So the PSU bank index is up 2.5%, and a lot of PSU stocks are reacting to on big moves, and even the delivery volumes are quite high for the last minute days, and that stands today as well. The other word is on the mid cap pharma names. The sense I'm getting is maybe a bit of churn is happening within sectors as well. So a bit of profit booking in the mid cap IT names, and that money seems to be moving towards the mid cap pharma. So that's a sectoral shift. But broadly, it's the PSUs which is leading the rally, and the bank index is now back in action and on big volumes as well.
Okay, got that. Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, Nigel, the first stock is SJV, and part of that whole PSU basket which is doing good. Stock is not reacting much in today's trade, but the number 2 was quite good, and I understand some large HNI investors are quite active in that stock. So that's the first one. The second stock is Nuvama Wealth. For the third day running, there are multiple blocks in that stock. I understand a leading HNI investor is quite active in Nuvama Wealth, and hence that stock is buzzing in trade today. The third stock is Canara Bank. I spoke about the bank stocks well bid, the PSU bank stocks well bid. Canara stands out within the PSU basket, big buying interest from large institutions. So expect very high delivery volumes, and it's buzzing largely on back of very strong FI flows. And the last one is Wockhardt. That's going to be interesting. The results are tomorrow, so watch out for earnings. But apart from earnings, there is an anticipation that maybe we'll see some further clarity with regards to one of their antibiotic drugs. So that's a big drug to track. But I guess that's something which is keeping the stock excited.
Okay, all right, got that. So lots of stocks buzzing, even though it's a slightly low volume day. Thank you very much, Nimesh, as always, for getting us the action. Let's now bring this down to some final trades that you could look at today before the midweek holiday settles in. Mitesh is back with us. Mitesh, what stocks are on your radar now?
So I think, the index actually, if you look at the moment after the gap down opening, hasn't moved much. So not much of an action happening over there. And given the fact that we have a holiday coming up, I think, we are still not changing our stance and we'll maintain a long bias. So I'll take take some long trades with a very tight stop losses. UPL is something, which I recommend buying with a stop below 549 and look for a target of around 557, 558 on the upside. And the other stock which I like is, excuse me, I already covered Canara Bank, but amongst the banking names, I think, State Bank of India is something which could possibly gain some traction. I was hoping it will get past 584, but we'll take a BTST here with a stop at 576 for a target of 595, because once 584 clears up, then I think some momentum should come in.
Okay, all right. UPL, that's an interesting one in there. Mitesh, that's been a big underperformer, but that's the one on your radar, so we'll keep an eye out on that one. Thanks so much for that, Mitesh. Well, Hemang Jani joins us to give us his take on markets. Hi, Hemang. Happy Diwali. Good afternoon. A few minutes to go before we go back into a holiday mode, so that's pretty good news. But what do you make of this PSU rally? Today stocks from all sectors are doing well. Do you have a preference about this entire basket, PSU basket?
Yeah, good afternoon, Nigel. Happy Diwali to all of you at CNBC and the viewers. Yes, clearly, I think PSU is the flavor of the season. And I think, it has something to do with the way some of the companies have reported numbers. So, for example, Coal India came out with a good set of numbers. The outlook in terms of production, the pricing, the e-auction price remains good. The dividend yield is 6%. So I think there is some sort of a buying interest which is emerging there. And when it comes to REC and PFC, I think the scenario, Nigel, which was there probably a year back when PSU banking sector got re-rated, primarily because the valuations were cheap and the operating performance started improving. So similar kind of an action is what we are seeing in case of PFC and REC, where the recent operating performances are good. Stocks are still quoting at about 1.1, 1.2 price to book. The growth outlook in terms of loan margins is getting better. So I think some allocation is being made to some of these PSU because of a combination of this. Within the sector, I think surely Coal India, to some extent, REC, NMDC, these are the names. SAIL also, the performance was reasonably good. So these are the stocks that go with. But I think what we have to reckon here is that the allocation has to be on a smaller side. These are not the large cap names where you can go, too aggressive.
Got it. All right. Got that, Hemang. What about these pharma names? You're getting a little bit worried out, yeah? You have Biocon that's down close to 3.5%. Glenmark Pharma now is down close to around 5%. Abbott as well is lower in trade. How do you view these stocks, and do you have a preference from the pharma pack?
So if you look at the pharma pack, Nigel, there is a bit of a divergence. If you look at the names like maybe Sun Pharma, Dr. Reddy's, Cipla, Aurobindo, I think when you look at the numbers, they have been by and large better than market expectation. Their commentary in terms of the US generic business is getting better. So I think those are the names where surely there is going to be a lot of strength and stability, because you also have a little bit of valuation comfort. But some of the companies, be it Glenmark, some of the MNC pharma companies, I think there is a bit of a disappointment on the numbers front. So there is a divergent trend, but overall, I think pharma as a space, this quarterly, result season has been extremely good, both in terms of top line and margin for 4 to 5 months.
Okay, got it. In fact, since we're talking about pharma, Hemang, just stay with us. Glenmark Pharma is under pressure post their quarter numbers. Ekta's with us to run us through the fine print. Ekta?
Well, yes, for Glenmark, it was a sluggish set of numbers, but there are a couple of key points which needs to be taken cognizance of. First is that the numbers were adjusted for Glenmark Life Sciences stake sale. Separately, there was an exceptional loss of around 67.9 crores this quarter. The exceptional loss included $30 million towards a settlement of price-fixing allegations in the US with the Department of Justice for one particular drug for Glenmark. Now, Q2 FY24 revenue was up around 6%. The margins, however, were weaker on a year-on-year basis, so 14% versus 15.9%, and the company recorded a loss this quarter of around 81.9 crores. Yes, there were exceptionals, but maybe it is the margins which really weighed in terms of sentiment. We had India, which was up around 2.8% year-on-year, and North America, which was sluggish, down around 2.2% on a year-on-year basis. Europe, however, did well, so that particular geography was up over 55% on a year-on-year basis. But nonetheless, it seems as though the markets were weighed down by the margins as well as maybe the sluggish performance of India as well as the North American business. The commentary will be awaited, which is on Wednesday in the morning hours in terms of a conference call.
Thanks a lot for that, Ekta. Well, let's move on then. Mark Mobius, co-founder Mobius Capital Partners, plans to step back from the investment firm and that he co-founded 5 years ago. He plans to focus on entrepreneurship investments and consulting. I think Hormuz, my colleague, is joining in to fill us in with more details on that. Hormuz.
Well, after almost visiting 112 countries, investing in 5,000 companies across 3 decades, writing 12 books and managing assets of over $40 billion, Mark Mobius, the 87-year-old fund manager, investor, also known as the godfather of emerging markets, has finally decided to step down. Now, Mobius's tryst with emerging markets began some 3.5 decades ago in 1987 when Sir John Templeton, the legendary investor, had asked him to lead the Templeton Emerging Markets Fund, and that was one of the first funds in the emerging markets across the world. And since they started off, they had invested around $100 million across 6 countries, and by the time Mobius left 3 decades later, that fund had grown to $40 billion in 70 countries. Now, but how did Mobius become such a revered emerging markets voice? For starters, he was one of the first ones to call the bull market of 2009, and he was also one of the few bargain buyers during the Asian financial crisis of 1997. Now, when panic selling had gripped the Russian markets a year later in 1998, Mobius chose to buy Russian shares, and he was also one of the few first institutional investors who identified Africa as a frontier market. He was one of the first ones to open a Mobius fund in Africa as well. Now, after he moved on from Templeton, Mobius went on to, as you said, he found Mobius Capital Partners in 2018, and that fund also focuses on emerging markets like China, India, Latin America. And when it comes to India, Mobius has always been bullish on the country, its market, and he recently interacted with CNBC-TV18 where he mentioned that he expects the sensex to go up to as high as 1 lakh over the next 5 years, and he also mentioned that he sees no reason to cut back on his allocation to India and the Indian markets per se. Now, Mobius has had a long journey, so it's pretty obvious that it would not have been without his fair share of adventures. Now, he dodged bullets, and by that I don't mean he prevented himself from making a bad investment, but he literally dodged bullets during a military coup in the Philippines. He also, in fact, a recent comic book refers to him as Bald Eagle. And one of the first theses that he wrote at the Massachusetts Institute of Technology, which is the MIT, was on communication satellites. And lastly, I'd like a quote to summarize his journey. And he said, and I quote, "I had taken bone-jolting rides on mountain roads that would have turned my hair gray if I had any left to turn, that is. All of that to find undervalued companies before other investors did." That summarizes Mark Mobius for you. With that, back to you.
Well, that's a wonderful, wonderful lesson in history and in time in markets about someone who has been literally as Reuters calls him, the godfather of investing in emerging markets. Thank you, Hormuz. Very nice one over there. We'll take a break on that note. Back with a little more market talk on the other side. Welcome back. You're with us on Closing Bell. Well, let's get you some more perspective from the market masters. The bull market in India is about to start. That's the word coming in from Atul Suri of Marathon Trends. Listen in to what he had to share with us on Muhurat Day. He was talking about investors preparing their portfolios for a prosperous Samvat 2080.
The fact is that the euphoria is in some pockets, right? But overall, per se, our market actually has been consolidating for the last 2 years. And that is why the setup is very good. Because, very often if you have a 30, 40-year kind of move here, the year after that is very difficult to build on it. But the fact is, I think if you look at markets, not just 1 year, because of course it's Diwali, somewhat to somewhat, but if you pull it back 3, 4 years, what we've done is just a 5-6% Nifty for back-to-back 2 years. So there's no real bubble or euphoria really that there is. And I think that is a very good positive and a base. So when you talk about a sight, a clarity, when the clarity or breakouts happen from long basis of consolidations, that's when the momentum comes in. So I feel that the bull market in India is about to start. I think that the continuation of the move in capital goods, engineering, infra, I feel that India is going through a massive shift in the whole capex cycle. And these sectors, the good point is that, I like things which have not moved for decades. And when they see a revival, the upside is massive. The trends tend to be large. And these sectors and themes have not done much. They have just seen a little bit of a 6-month or a 1-year kind of run. I have a feeling that this is going to be the big theme which is going to dominate the markets for the next few years. The big thing I really want to talk about, Prashant, is the fact that most people think that small and mid caps are bubble, that there is euphoria, etc. Yes, valuations have got stretched somewhere, but I don't think that it's going to be across the board. I feel that there are some companies coming out with very good numbers. A lot of industries seeing a very good revival. The fact is that the 50% of the market, which is important and which is in everyone's portfolio by way of whatever funds they hold, has actually been very quiet. So the thing is that broadly the market is coming out of a nice sedate 2-year consolidative phase, and when breakouts happen after consolidation, I think there is a good amount of energy that goes in, and I think that there is going to be continuation. As I said, the whole capex cycle turning is going to be a far-reaching impact on a lot of stocks, especially in the mid and small cap.
Okay, interesting view coming in there. By the way, we have Manappuram Finance that has come out with its set of numbers. And by the face of it, in comparison to the poll that we had out, these numbers look good. So we have the net profit number that's much better. And the second number is the NI, that as well as 100 crores better. So these numbers look relatively better in comparison to what we are working with. Abhishek will be joining in a few minutes from now to fill us in with more details. But for the time being, let's get in Hemang's view. Hemang, we just got two numbers, the net profit as well as the NI number. But the big talking point has been that the banks have sensed an opportunity in this gold financing space. And they are making their moves, which in turn is limiting the growth of these gold financiers. How would you approach them, and if any view on Manappuram?
Nigel, if you see the Manappuram numbers, we are yet to get the fuller details. But Muthoot Finance, would be a right comparison to look at. So in case of Muthoot, there was surely a lower muted growth. And also for many of these NBFCs, the margins, the NIMs have been under pressure. So I think, it will be good to see what kind of, growth Manappuram is displaying and at what margins. Clearly, the market would focus upon the companies where see a little bit of surprise on the NIMs and a better outlook on the growth front. So only once we have those details, we'll be able to kind of form a view there.
Okay, that's a word on Manappuram. Well, with that, let's actually get you some more opinion on the market. Again, a market master we were in conversation with on Muhurat Trading Day. We caught up with Helios Capital, Samir Arora, on the FII interest in India and his take on where the market is headed ahead of general elections, what the possibilities could be depending on that electoral outcome next year. Listen in to excerpts from that special conversation.
I don't agree with this conversation that, foreign investors are selling because they find opportunity because the interest rates are high. That is one small part. First of all, the equity guys don't immediately switch around their interest to debt, and they find within their basket, India versus China or India versus something else. So I think these are small things. Foreigners will come, and Indians have always been there in the last many years. Therefore, both the things will work together as long as the rest of the thing is doing well, which is the corporate sector and earnings. Therefore, overall, it is positive. If, let's say, it's like 2004, where there's a change of government altogether, I think you will lose like 2004, which means 20% down on day one. And then you recover it over next 12, 18 months. But the probability of that, I don't know how to calculate, but I would think it's no more than 5, 7, 10%. But if it happens, the market will fall. You can't immediately discount absolute surprises. And then people will have to adjust. But that is what happened in 2004 also. And then, life moves on. We have seen market move on with wars and elections is one thing. But initially, and for the 6 month, 3 month, 9 month, it will be a negative performance for sure.
Okay, well, that's Samir saying it as he sees it. Back to Hemang for some more thoughts. Hemang, as we're coming down to final thoughts on the session, give us an idea. Anything from mid-caps, because that's where the excitement has been, mid-caps or small caps. Earnings season has also drawn to a close. So something that stood out as let's say, a pataka for you.
So I think, if I have to look at some of the interesting mid-cap ideas, I will look at some of the garment and textile exporters. So Gokaldas and Welspun India are the two names where, we think that in terms of growth, in terms of valuation, there is a lot of comfort. and there would be surely about 15-20% kind of an upside potential. And one more theme I would like to touch upon is the wealth theme, because the entire capital market ecosystem, exchanges, depository, brokerage firms, have seen a good amount of action, and wealth companies would also be a sub-segment of that. So I think 361, which is ex-IIFL Wealth, Nuvama, which is a newly listed demerged arm of Edelweiss. I think these are the names that one should surely look at.
Okay, all right, Hemang, just hold on to that thought. By the way, pull up the intraday chart on Manappuram Finance. For whatever is out, whatever the details are out, and I think there are two key numbers in there, the intraday chart should tell you a picture. That stock has spiked up, and spiked up in style. It's moved to the high point of the day as we speak. So, a little tricky because it's in the dying minutes that it's come out. But for the time being, at least, the street is buying that and hoping that the fine print as well will be equally good on that particular stock. Hemang, before we wrap up, tell us that, a couple of stocks with the markets or a sector which is looking overheated as of now, which you'll say, okay, the good news is in the price, let's step aside for the time being.
I think, Nigel, what we have seen is that in case of, let's say, cement, definitely the sector has run up quite a lot. And the mid-cap cement companies have seen a run up in anticipation of some M&A activity, whereas we haven't really seen anything major. Even some of the numbers that companies have reported have not been that great. So that is one particular space that one should avoid. And of course, the mid-cap infra companies, with all kind of order flows and, the story that people are narrating, I think the quality and corporate governance of some of the mid-cap infra companies has not been great. So that is one pocket that I would like to avoid at this point.
Okay, all right. Hemang, we'll leave it on that note then at this point in time. Thank you very much for being with us. Thanks to both Mitesh and Hemang for taking us through the market close. And we are getting a close which is actually fairly quiet, not much change on the large cap screen. At least the Nifty was largely down about 80-90 points right through the day. And that's how the day is closing up as well. 19,440. That's the level that we are clocking right now. The story is that there was some recovery in the financials in the banks, but not enough to change the picture on the Nifty too much. So if I talk about the downside, IT, banks, and some of the heavyweights like Reliance, that was the problem area for the market. So that translates into names like Infosys losing about 1%, ICICI Bank, TCS, HDFC Bank, RIL, of course. All of these stocks down between 0.5% to 1%. Not too much, but this was the kind of cut. SBI Life had a rough day. So did Bajaj Finance. Both of these stocks down between 1 to 2.5%. So some of the financials looking weak. On the upside, Coal India, what a star, of 5% solid rocking up move. After that came in Eicher Motors with a good performance for the second quarter. Hindalco also did pretty well, and M&M saw some buying. So two of today's stars, companies that Nigel tracks, and both of them hitting it out of the park today.
Well, that's right. Coal India has hit an 8-year high. Actually, that's what Hormuz tells me. So big move that we've seen out there. That stock does very, very well today. But from the broader markets, there was plenty of action in there. You had Everest Kanto, the stock was up close to 14%. You had Vocart, that outperformed actually the farmer index. That was up more than 10% in trade today. Quick Healers up 9%. You had CAM, CAMS, so that one as well was up. BSC up close to 9%. Big move out there. Zagil, we'll try to do a deeper analysis on that one. That stock as well is up close to 9%. Motilal Oswal as well, 8%. So plenty of gainers actually Surabhi from the broader market. So the headline index goes on with a cut. A few of the names that Surabhi spoke about, well, they are part of the Nifty Financial Services Index. And that index was playing out expiry. So maybe expiry-related move out there. On the flip side, you had Igarashi Motors. The stock did take a knock. Glenmark Pharma take a bit of a knock in today's trading session. A couple of other notable stocks as well that did move down. HG Infra, that stock was down close to around 5%. But Surabhi, the good news is we're off tomorrow.
It couldn't have come at a better time. I think, a lot of hard work goes. Of course, the CNBC-TV18 team has been pulling it all together, bringing you vibrant and very informative, insightful programming all through Diwali. So, yes, I think I can say that for Nigel, me, and the entire team that puts these splendid shows together. It's a wrap on this one, closing bell, but do stay tuned because coming up after the break is our Diwali special edition of Market Cafe. In this one, I caught up with Neil Parekh, who's the MD and CEO of Parag Parekh Mutual Fund. as well as Nilesh Rao of Envision, and both of them are giving out some big picture ideas for the next somewhat. Hear this out, it'll be an interesting one right after the break.